Hello everyone, my name is Carl Zellner. I'm one of the attorneys with Anderson Advisors, and today we're going to be talking about Bitcoin. Title of presentation is Bitcoin Investing in an Idea. We're still on the frontier of this type of investment, so we wanted to get some information out to our existing clients and potential new clients on how Bitcoin works, how the IRS treats it, and things along those lines. So in this presentation, we're going to teach you how the IRS treats Bitcoin, tax implications of buying and selling Bitcoin, and how to protect your Bitcoin from predatory plaintiffs. Some definitions starting out for those of you who may not be as familiar with Bitcoin is blockchain, which is the digital ledger that the public uses, and it keeps track of the transactions in chronological order. Some folks are even involved in what's called Bitcoin mining, which is by servicing the blockchain, you receive Bitcoin as payment. A public key, which is one of the keys used in Bitcoin, used to ensure that you're the owner of an address that can receive funds, and the private key, which is used in conjunction with the public key to access the funds in your Bitcoin wallet. And your wallet's where all the details of your Bitcoin transactions and accounts are saved. Now, starting out this, I wanted to do a little bit of trivia or some fun facts for you. One of the questions that gets asked the most, especially for those who haven't been investing in Bitcoin already, is who is in charge of the internal workings of Bitcoin? Quick answer, everyone and no one. Folks are all involved in the mining, help maintain the blockchain, but one of the main tenets behind Bitcoin is that it's a decentralized form of money. So everybody helps and pitches in with the blockchain maintenance, but ultimately there's not one central figure that regulates it. There's also preached when it was released that only 21 million Bitcoins will ever be generated. This is one of those questions that comes up from time to time, especially in the times when Bitcoin becomes more popular, and it's that how could there ever only be 21 million? They have to be generating more at some point. Well, the answer to that is also just as confusing. It is, there may be more, there may not be. It just depends. The Bitcoin was invented by a person or persons named Satoshi Nakamoto towards the end of the 2000s, and nobody knows who that person or persons are. Many people have speculated. There's always speculation on if it's a group of people. There's even rumors it's Elon Musk. We don't know. But the ultimate answer to number two is for 21 million, are they going to create more? We don't know, because we technically don't know who created them or what kind of path you would have to go through if, say, the creator is now passed. We don't know because we don't know who they are. So, next question is, okay, we have a public key. Public can see that. What happens if I lose my private key? Well, short answer to that is you're screwed. You got to keep control of the private key because you're the only one who knows it. There are lots of storage options as far as you can keep your private key in a digital wallet. You can also, they have cold storage options, meaning you can have a piece of paper in a vault somewhere with your private key. But there have been numerous cases of people losing that private key and losing all access to their Bitcoin. Not to tell stories out of school, but we have a colleague here at Anderson who built up quite a bank of Bitcoin when it first came out by doing some mining for Bitcoin, and it rang up to the tune of about, when it went up to 19,000 there about a year ago, where he had about a few $1 million sitting in Bitcoin and had lost his private key. Now, in that circumstance, luckily he found it and was able to recapture that and be able to get control over his account. But in the scenario where he didn't, there would just be dormant Bitcoins sitting out there in cyberspace waiting to be collected. Last question is a little bit rarer, but interesting nonetheless, in that does the U.S. government own Bitcoin? The answer is yes, they do. Through seizures and other legal means, the government owns, at last count, over 274,000 Bitcoins. That's a lot of Bitcoins and is one of the largest single owner of Bitcoins in the world. So now on to the next. Mr. Wonderful, Kevin O'Leary, puts into good words why it's so difficult to use or judge Bitcoin. I'll read the quote for you as well. The fact is, it is so unstable, volatility is both directions, it's up, it's down, that nobody in a substantive transaction will take that risk. So what he's saying is, for those who are wondering, is how do you conduct business when you don't know the value of your Bitcoin? A year ago and some change, it was $19,000 a coin. Today or this month, it's in the $3,000, $4,000 level. Now, if I'd written a contract to purchase a building, purchase a house, purchase something worth a substantial amount of money, and I was the one with the Bitcoin and spent it, I'd be riding high because my Bitcoins weren't worth much. But the person who sold it to me would be sorely, would be hurting in the fact that if they originally took my coins to purchase that property, they would now be worth, less than a quarter of what they were worth a year ago. So that's what Mr. Wonderful's talking about, and that's why this area of investing is so speculative, because it's hard to track down a price or a consistent level. Now, where are we headed with Bitcoin? So we know there's some volatility issues, but where are we going? I mean, we've all heard the story. I mean, the first story with Bitcoin was somebody first bought a pizza. The first transaction with Bitcoin was somebody bought a pizza for 300 Bitcoins back when it first started. Pretty cool. Although I'm sure at this point they probably wish they held on to them. But interesting stories abound. People have started to trade Bitcoin like stocks. You can trade it 24 hours a day, has market volatility, it goes up, it goes down. But what are the implications of that? Mining operations have become, so for Bitcoin mining, where you're actually servicing that blockchain and earning Bitcoins while you do that, have become much less popular. And the big kids are starting to push the little kids off the playground. Problem being is that the cost of mining Bitcoins has gotten so expensive now between utilities and everything else that you can actually be losing money while you're earning Bitcoins. So it's important to do your calculations. The folks that are really making money out of it now are usually using warehouses in remote locations where they can get utilities for cheap, and they're using little mining bots or little contraptions that'll mine for them and have several of them strung together. Wider mainstream acceptance of Bitcoin in the marketplace. We are starting to see more Bitcoin ATMs and things along those lines, but until it becomes easily acceptable and easily usable in the marketplace, that fluctuation is still going to continue simply because there's a limited amount of people using it. So small bits of news, small bits of information or legal regulation can shift it almost universally overnight. And that's why we've seen such sweeping changes and dives over the last few months. So regulations in the new frontier. This is a new frontier. Yes, Bitcoin's been out for a while, but compared to other investment opportunities, it's still highly unregulated, as well as new regulations are coming out daily because it's unregulated. Well, monthly, let's say. So, in the new frontier, there's lack of guidance or law. Bitcoin is property, not currency. I know it is almost a misnomer when you see the word coin in it. We all think currency, but the IRS says we're to treat it like property, and that's how we're taxed. There's a lot of changes to come. For example, one of the states that we love to use the most, Wyoming. Wyoming used to be one of the least friendly Bitcoin states and has now become one of the most friendly Bitcoin states simply by a couple changes to their banking regulations. Ultimate goal here, folks, same as everything else we do here at Anderson, you do not want to be the test case. Might as well pay your fair share of taxes and move on versus being a test case or being held out as an example to others of what not to do. So this next slide is IRS, as I mentioned, treats Bitcoin as property. So how is property taxed? If you hold property for more than a year, you normally get long-term capital gains rates. So if you take a look at this, you can find where you end up on there, but 0, 15, or 20 are your options. Long-term, and I'm going to get to the punchline quick here, long-term capital gains rates, if you have a choice, are taxed much better than short-term capital gain rates, which we'll see here. And short-term capital gains just means at your normal tax bracket. Okay? So, we mentioned the IRS treats Bitcoin as property, and less than 1 year, if you hold your Bitcoin, is short-term capital gains. More than 1 year, long-term capital gains. So in a perfect world, we'd all hold our Bitcoin for more than a year and sell it and do it at short-term or long-term capital gains rates. Problem becomes with such market volatility, how do you guarantee you can hold on to it for a year? Maybe you bought it at 3,000 or 4,000 and it was a couple years ago, and you hit that 19,000 and you want to get rid of it before you get back to present day $3,000 around there. Well, then that's fine. Just realize that you need to report that gain as short-term capital gain. The other issue you run into is a mixed gain portfolio, like stocks. So you bought some Bitcoin at some point, sold a little bit of it off, held on to some of it. There's lots of calculators out there. There's software where you can use to determine how much of your portfolio is short-term gain versus long-term gain. Ultimately, though, at this point in Bitcoin, if you're reporting and paying taxes on it, you're way ahead of the game. So I would suggest if you have a mixed portfolio, you use one of the calculators to determine what's short and long-term. But ultimately, if there's a couple mistakes in there, not the biggest deal in the world. Like I said, you're still ahead of 99% of the other people out there with Bitcoin who don't know how it's taxed and are running around like they just robbed the Wells Fargo wagon through the Wild West. So pay your taxes. Now, the one caveat or the one interesting piece or one of the interesting pieces in Bitcoin is if you are mining Bitcoin, you are also subject to the 15.3% self-employment tax because it's classified as active income, because the act of mining generates that percentage. So be aware, if you're Bitcoin mining, if you're cloud mining, that type of income is subject to that 15.3% self-employment tax. Asset protection. Just like any other type of property, Bitcoin can be taken from you in a lawsuit. This is one of the things that is touted all over the internet that is extremely annoying. It can be taken from you. I just told you in the beginning that the United States has a ton of it. So they had to have got it somehow. And my guess is Alan Greenspan at the time was not investing in it. So it can be taken from you. And if a judge orders you to give it up and you do not give him your private key, then you get to spend some time in an orange jumpsuit behind bars thinking about your contempt of court. So do not be fooled. It may be a more private way to hold money, but it is available to judgment creditors. And it can be attractive to judgment creditors because it'll be viewed as an appreciating asset in the long term. It's almost exactly like looking at a stock portfolio in that you can trade it, it's property, short and long-term gains, and attorneys like to grab it. And more attorneys are starting to look for those types of assets as well as they grow with popularity. Now, in the beginning, the big kid was Bitcoin, and it's the most common one known, so that's why we talk about Bitcoin. But since then is Litecoin and Ethereum and the thousands of others who've come to market and already failed. But people are looking. They know it exists. It's not some dark web investment anymore. So be aware of that as well. So a couple different investment strategies. We at Anderson use a lot of these for the same type of, like we say, stock portfolios, things like this. The corporation involved in an entity structure is the best way to deal with active income or short-term capital gains. So in the idea that we would have a Wyoming LLC for some anonymity, since all of the transactions happen in the internet, and we'd attach to a corporation. Now for long-term investment, you can hold it in a more passive entity because long-term capital gains are basically the best tax treatment you can get on these type of investments. So we would go Wyoming to Wyoming so that we do not have other investments intermingling with our Bitcoin in case something were to happen in that other investment. And for those of you that have come to some of our asset protection events, you'll be familiar with some of these strategies because of the way we talk about inside and outside liability. And for those of you who haven't come to one of those events yet, you should stop by. It's a good time. Now, a Bitcoin mining strategy. For those of you that have seen some of our videos on Airbnb, some of our presentations from those 3-day events, you're going to be familiar with this strategy. So we know Bitcoin mining generates active income, and it has that 15.3% self-employment tax attached to it as well. So by leasing those servers or those mining bots to yourself, which is a passive activity, you can move some of that active income around and save some of that money from just mining directly in your own name. It's important to have all these small details involved if you're doing mining. So I'll have a slide at the end which tells you where you can get a hold of us. But really, if you're doing mining, you need to have an individual consult. And also, if you're just buying and selling, you should have one so we can make sure you're getting the best treatment you can. Because we believe in paying our fair share of taxes, but we don't want to leave a tip. So portfolio placement. Where does Bitcoin belong if I'm a real estate investor, if I'm a stock trader, if I'm just involved in other investments in general? It is still a speculative investment due to the volatility, due to the inconsistencies, and due to the lack of central authority. Not a bad thing, just the reality. So lack of stability and measurables, you can invest in it. I invest in it. I like it. But I don't rely on it. I'm not putting 90% of my worth into it, hoping for a rise. I take it with me like it's my gambling money at the casino. I hope it works out. It could be cool. If it did and it rises, and I think it will over time as it becomes more popular, as there's more uses for it. But you don't want to leave yourself out on a limb. This is your play around money. This is your spec money. So things you don't mind risking or losing. So we talked about how the IRS treats Bitcoin, tax implications of buying and selling Bitcoin, how to protect your Bitcoin from predatory plaintiffs, as well as even where it belongs in your portfolio. I would encourage all of you who've listened or liked this video to give Anderson Advisors a call, numbers on the screen, or visit our website, and we're happy to have a consultation with you. And obviously, we're always willing and happy to do a free wealth planning blueprint with you, where we sit down, we have a conversation, and we show you what you should have in place to work with in the future. It's a pleasure speaking with all of you, and I look forward to working with you. Bye.